On August 7, 2018, Elon Musk posted a single tweet: "Am considering taking Tesla private at $420. Funding secured." Within minutes, Tesla's stock surged 11%. Trading was halted. The market value swung by $14 billion. 17 days later, the answer was devastating. There was no funding, no deal, no plan. This is the story of how certainty became chaos and how the world's most followed CEO gambled his reputation on two words that weren't true. By August 2018, Tesla faced a crisis. They were burning through cash faster than they could make it. Production of the Model 3 was stuck in what Musk called production hell. The company had lost $2 billion in 2017. Short sellers had taken massive positions against the stock, with short interest exceeding $13 billion. Meanwhile, traditional automakers posted consistent profits. General Motors generated $12.8 billion in 2017. Ford made $7.6 billion. Volkswagen reported $14.3 billion. Legacy automakers thrived while Tesla struggled to survive. The assessment: Tesla couldn't compete with traditional manufacturing economics while funding massive growth. Musk made a decision. Rather than face quarterly earnings pressure and short seller scrutiny, he would take the company private, remove it from public markets entirely. They would need between $20 billion and $70 billion, the largest leverage buyout in history. In the months before August 2018, Musk had met with Saudi Arabia's Public Investment Fund, which managed over $600 billion and already owned 5% of Tesla. According to Musk's later testimony, the fund's leadership had been unequivocal in his support for taking Tesla private. Musk believed funding was available. No specific terms had been discussed, no price negotiated, no written commitment exchanged, but in his mind, the funding question was settled. On August 7th, while heading to the airport, Musk read that the Saudi fund was increasing its Tesla stake. He worried discussions would leak. He wanted all investors to have equal information. At 12:48 p.m. Eastern Time, without consulting Tesla's board, without retaining advisors, without securing actual financing commitments, Musk tweeted. Tesla's stock jumped instantly, from $356.67 to past $371. Then $380. At 2:08 p.m., Nasdaq halted trading due to volume spikes. The stock was up 7.3% in 78 minutes. Investor Tim Freeze purchased 50 shares the next day for $18,000. Here we had Elon Musk telling the world he plans to take Tesla private with funding secured. That felt like a good entry point. Glenn Littleton also bought shares, believing the deal was legitimate. The market asked one question: was this real?
Is whether when Elon Musk said funding secured, did he have indeed funding secured?
Federal trial over his 2018 tweets about taking the company private.
8 days later, the SEC subpoenaed Tesla. The promised funding was unraveling. On August 24th, 17 days after the tweet, Musk published a blog post, staying public. There had been no secured funding, no agreement with the Saudis, no commitment from other investors, no approved plan from Tesla's board. The $420 price wasn't based on financial analysis. According to SEC filings, Musk chose it partly because he thought his girlfriend would find it funny due to marijuana culture. Tesla's stock fell to $263.24 by September, more than 30% below the pre-tweet price. The market value decline erased approximately $14 billion. On September 27, 2018, the SEC filed securities fraud charges. The complaint was direct. Musk made false and misleading statements.
Today, the SEC filed securities fraud charges against Elon Musk, the chairman and CEO of Tesla Motors.
I'm considering taking Tesla private at $420, funding secured. So $420 because it's the significance of that number in marijuana culture.
He failed to have even fundamental terms in place. He had not discussed specific deal terms with any potential financing partners. 2 days later, Musk and the SEC settled. Musk would pay a $20 million fine. Tesla would pay $20 million for failing to control Musk's communications. Musk would step down as chairman for at least 3 years. Tesla would establish a committee to pre-approve tweets containing material information. The impact extended beyond settlement. By February 2021, After another controversial Musk tweet, $15.2 billion evaporated from his net worth in a single day. Investors who owned Tesla during the August 7th to 17th period filed a class action claiming billions in losses. Tim Fries lost $5,000. Glenn Littleton lost over 75% of his investment. The trial began in January 2023. Musk testified for 8 hours. "I had no ill motive," he said. "My intent was to do the right thing for all shareholders." He explained he feared a leak and wanted retail investors to have equal information. Regarding funding, Musk insisted he believed it was secured based on conversations with the Saudi fund. When pressed about specific commitments, the pattern was clear. Conversations had occurred, interest had been expressed, but written agreements and definitive terms had not been established. After less than 2 hours of deliberation on February 3rd, 2023, the jury reached a verdict: not liable. Musk had won. The decision vindicated him legally, but didn't erase what happened. 5 years after the tweet, the consequences are clear: $40 million in settlements, chairman position lost, Twitter restrictions imposed, $15 billion in personal wealth evaporated. Tesla survived and eventually thrived, posting its first annual profit in 2020 and exceeding $1 trillion in market cap at its peak. But the question remained: what exactly went wrong? The data reveals 3 critical mistakes. First, Musk confused intent with execution. He believed funding was secured because he felt confident the Saudis would proceed based on previous interactions. But confidence isn't commitment. A handshake deal for 5% isn't precedent for a $70 billion leveraged buyout. When Dell went private in 2013 for $24.9 billion, Michael Dell spent months negotiating with Silver Lake. Definitive agreements were signed. Board approval obtained. The announcement came after the structure was set. When Anheuser-Busch InBev acquired SAB Miller for $107 billion, years of preparation preceded the public announcement. These leaders announced deals, not aspirations. Musk announced an aspiration and called it a deal. Second, Tesla failed to establish appropriate controls over material communications. In 2013, Tesla filed notice that Musk's Twitter would be used for material disclosures. But no policies governed how he used it. No review process existed. When Mark Zuckerberg announces Meta earnings, legal teams review messaging. When Tim Cook discusses Apple launches, communications coordinates rollouts. When Satya Nadella announces Microsoft acquisitions, compliance ensures regulatory requirements are met. These companies build guardrails because public markets demand them. Tesla built none. Third, Musk prioritized speed over accuracy, where accuracy mattered more. He worried news would leak. He wanted retail investors informed. These were reasonable concerns, but the solution wasn't to tweet false information. The solution was to either secure actual funding before announcing or communicate interest in exploring options without claiming deals were done. The SEC settlement, the lawsuits, the governance requirements, and the reputational damage all stemmed from choosing urgency over truth. Here's what we know today. In August 2018, Tesla was trading at $356.67. The company had serious problems: cash burn, missed production targets, short seller attacks. But thousands of investors still believed in the mission enough to hold through uncertainty. In the 17 days after funding secured, the stock swung by $14 billion as the market tried to determine what was real. By August 24th, the truth was clear. There had been no secured funding. The announcement was based on optimism, not agreements. The 2023 jury found Musk not liable for investor losses. But liability in court and responsibility in reality aren't the same. The $40 million in fines was paid. The governance changes were implemented, and every CEO who followed the case learned the same lesson. The lesson for other leaders: confidence and truth can look identical in the moment. The difference only becomes clear when scrutiny arrives. Confidence says, "I believe this will work, so I'll announce it." Truth says, "I have confirmed this will work, so I can announce it." Confidence respects your vision. Truth respects your stakeholders. Elon Musk chose confidence. He believed funding was secured based on conversations. He announced publicly to beat a leak and ensure fairness. 7 years later, Tesla is worth hundreds of billions. But the number $420 will forever be associated not with a successful transaction, but with the day a CEO learned that 2 words can cost $40 million, a chairman role, and a lesson the entire business world watched unfold in real time.